Friday, December 27th, 2024, Maneco 64, home of alternative economics and contrarian views. Some of you might be wondering why I haven't posted for about 3 days. Well, you probably seen my last video. I'm in Switzerland with the family. We're having a very good time, had a very good Christmas. I did a little bit of skiing yesterday. Hopefully I will do some today. The weather has been very good here, unlike in England. Well, actually, when we're traveling here, when we arrived here, it was snowing a lot. And it snowed for the first 2 days. And now it's stopped and it's really sunny. So it's perfect weather. Anyway, I hope you all had a very Merry Christmas, a great time with your family. And also, I saw that Hanukkah fell on the same day as Christmas this year, the 25th. So for all my viewers who celebrate that, I like to wish them also a happy Hanukkah. And yes, a lot going on. Of course, I'm not watching things as closely. Sometimes you got to take a little bit of time off. But there is something that I talked about on the 25th of November about commodities. I said commodities are on the cusp of resuming a secular bull market. And I said that gold and silver were leading the way. And I think they still are. They usually do. Gold and silver, they lead the way. And I covered the CRB Index, and it hadn't quite broken out yet, and out of like a consolidation pennant formation. But as you can see here now, it's starting to break out slightly. And I also spoke about China, because the last time China had announced a moderately loose monetary policy back in around 2009, 2008, after the great financial crisis. The CRB recovered quite a bit, as you can see. And recently as well, when I spoke in November, China had just announced for the first time since then, ever, well, not ever, for the first time in like 14 years, as it says here, China loses monetary policy stance for first time in 14 years. Markets rally as Communist Party officials to meet in coming days to discuss country's economic policy. And I think I don't think anything's changed. And I've also seen that commodities like the soft commodities like cocoa and coffee, they're making all-time highs. Yes, we're given excuses why that is happening, like the cocoa trees have been damaged or something in West Africa. Africa, of course, has 2/3 of the cocoa crop. And I also saw that the people who are into basically the climate change agenda, into the alternatives, right, to the lab-grown food and stuff, they're talking about trying to find an alternative to cocoa. I think the company is called Mondelez International, which basically used to be Kraft, right? I wonder if Bill Gates is involved in that. Of course, there is no alternative to the cocoa fruit and to chocolate, but it seems like they're not too keen when prices of things that benefit places like Africa goes up, right? So they want to find an alternative. I don't think that's in the cards. So it looks like cocoa, coffee, they're driving prices. And I don't see the cost of living going down either. We could see some luxury goods and some other goods go down in value, but I think all of you agree with me that everything that you need to survive on, like food, energy, cost of housing, rent, to buy. Mortgage rates, they're all going up, and it's not going to get better. And one thing people don't realize is that when interest rates go up and the cost of financing goes up, as our economy is so leveraged, as corporations and individuals and governments are so much in debt, all their costs go up. Corporations have to pass on that cost of financing to the consumer. And I also saw that now Wall Street, the markets are discounting less than 2 cuts for 2025. We saw in the previous Fed meeting that they revised it down from like 4 cuts expected to 2. Some people expected 3. Now it's almost now it's below 2. So I think the Federal Reserve is going to have a problem cutting rates too aggressively. We're seeing the bond markets as well. The yields continue to rise in the longer ends, so the curve is steepening. I see here that the 10-year yield got above 460 in the last couple of days. Right now it's around 458. In the UK, the same thing is happening, of course. Nothing is getting better. So I think we need to keep an eye on commodities. The other reason why I've been bullish on commodities actually since around the end of 2019, beginning of 2020, is that commodities go in cycles of about 8-10 years. And the last time we had the bull market in commodities was at the top. It topped in 2008. Yes, it rebounded in 2011. And we saw that 2020 bottom crash in 2020. We've seen, as you can see from the chart again here now, a big move up. And we've had, since the middle of 2022, a consolidation. Yes, we could go back into that pennant, but I think it's almost about time that commodities start running. And with all the attention focused on AI, tech, the magnificent 7, cryptocurrencies, there's very little focus on commodities. The other thing that's going to affect commodities going forward, in my opinion, is the geopolitical situation. Yeah, the NATO, US empire versus BRICS, Global South. And I think it's one of the reasons, unfortunately, for all the proxy regional wars that we're seeing. It's all to do with commodities and having control of commodities. Of course, Russia is the biggest country in terms of not only land area, but of wealth, mineral wealth. US is number 2. But yeah, the Anglo-American Empire, they want to control the whole of the world. And if you don't have control of Eurasia, as Mackinder said, you lose control of the world island. And you might remember Lindsey Graham, the senator, saying, I think earlier this year, that the West and NATO and the US have to make sure they don't lose Ukraine, because they have like trillions and trillions of natural resources. So sometimes these people admit the real reason why they foment and fight these wars. Well, they don't fight it. It's like they sent people to fight it for them. And hopefully people will wake up and realize they're not fighting for freedom or democracy or anything else. They're fighting for the bankers and the globalists' control of natural resources. They don't want Putin or Xi Jinping controlling it. Am I for Putin and Xi Jinping? No, I'm just trying to observe here. And what this is going to do, of course, it's going to disrupt a lot of the supply chain that we've seen since the beginning of the century, when China joined the WTO and the world is globalized. It's traded freely, and peacefully. Now all that's off the cards, and I think it's going to disrupt a lot of the commodity supply chain. And yes, some people say a lot of stuff is happening to the climate and it's affecting crops and stuff. Well, that's always happened in the past. That's just things that happen normally, and they sort themselves out in less than a year. But I think this is more secular and it's more fundamentally based. The other reason why I think commodities are going to keep doing well is that historically, when the dollar's been weak against other fiat currencies, commodities go up. And why is that? Well, because all commodities are still priced in dollars. And the dollar's been relatively strong of late, of course, against all fiat currencies. But I think that could turn quite quickly. And despite that, commodities are still relatively elevated. So I can see commodities do really well if the dollar turns south. Of course, there's a lot that could happen still in terms of the fundamentals for the economy. We could see the U.S. economy weaken. I think that's highly possible. Some people already think that we are in a recession, and that a lot of the numbers are tinkered with. And also the yield curve was inverted for a long time. It's disinverted now, and usually when the yield curve inverts and then disinverts, it's only a matter of months until a recession pops up. And maybe the new administration will want to have a recession early on so that the cycles coincide with the electoral cycle, the economic cycles. And so, yeah, you could have a commodity bull market in a slowdown. That would be more related to the loss of purchasing power in the currency, and it's what we call stagflation. Back in the 70s, very few people thought that was possible to have rising prices or the consequence of inflation while the economies weren't doing well, while there was high unemployment. But I think that's very much possible, and I don't think the powers that be, the governments and central banks, would allow the slowdown to be very sharp. They would come out with more accommodation, be it monetary or fiscal, and that itself would also put a rocket up commodities. And that's why I think we need to keep an eye on this. And this chart is pointing to me to the fact that we could see a big breakout in commodities this coming 12 months or coming few years. So what about the markets? What am I seeing here this morning? Well, I'm very early this morning here in Switzerland. It's like 7 o'clock, which is 1 a.m. Eastern time on the 27th. I saw the markets reopened yesterday, not in the UK and most of Europe, but in the US it did. I saw that gold traded up to 26.39. I think one level to keep an eye on, and I'm only talking about this more for the short term, is 26.33. That was the close of gold in the third quarter. So if we were to close the year or December at above that level, 26.33, that would be normal and bullish. Even if we didn't make a new close at a new high for the quarter, I think the long-term trend, of course, is still there. I'm still of the belief that we are in a secular bull market for gold as well as commodities. So right now, spot gold is at 26.31. It's down about $2. Low's been 25 and the high 37. And silver as well. Well, silver, of course, is probably the most unloved metal or asset on the planet. And I still continue to acquire it. And I think also the mining sector is interesting. not just for gold, but for silver as well. We're trying to break back above 30 here. And yes, it's frustrating. It's been, when was it? Almost 4 years ago, February 2021, silver tested 30 when that silver squeeze movement began, and it failed. And here we are, like I said, almost 4 years ago, and we're still around that level. But I think silver would be very rewarding, though. And yeah, right now we're at 29.80 unchanged. The high overnight has been 29.93, the low 69. While the rest of the markets are very quiet right now, as you can, it's trading in Asia. But yeah, so yeah, let's see. The Dow Jones futures index futures is down 50. The Nasdaq 100 is down about 40. And the S&P is down about 10 points. Yeah, and a lot of people are still expecting a crash in the markets or a big correction. That is possible. That is possible. But it seems like markets can remain irrational longer than they can remain solvent. And actually, that's one of the things that John Maynard Keynes said that I agree with. Most of what he said, in my opinion, unfortunately has affected the world in the way governments and central banks operate now. And it's the root, he planted the seeds for this debt-based system that we have, which, yeah, in my opinion, is on its last legs. And the main beneficiaries will be real things like commodities. Not because they're any special or becoming more rare or difficult to extract. It's a revaluation because in the last 15, 16 years since the '08 crisis, we've had so much money printed and so much growth in the value of financial and paper and derivatives assets that if they correct massively, I think a lot of money will go into real things, and it's already going into real things. We can see a lot of billionaires buying farmland and things like that. So with that, I'm going to wish you all a very good day. And I'm going to try to update you as regularly as possible. But we are going home soon, so it's going to be business as usual very soon. Hope you understand that. And yeah, I'm going to wish you here a good rest of the week. And I'll talk to you later. Take care. Bye.